and welcome to the Harvard Kennedy School China Conference 2022, the US-China Economic Panel. And this year's conference is in partnership with Center for China and Globalization and the US-China Exchange Foundation. I'm the moderator today, William Xue. I'm currently a graduate student and the co-chair of Great China Society here at Harvard Kennedy School. And today, we are very excited to have three distinguished panelists to join us. And I'll give a very brief introduction of our three guests. The first is Professor Jason Furman, the Aetna Professor of Practice of Economic Policy at Harvard University. And he was the 28th chairman of Council of Economic Advisors from 2013 to 2017, and was also the President Obama's chief economist and member of the cabinet. The first and second, we have Professor Zhiwu, the director of Asia Global Institute and the chair professor of finance, and Victor and William Fang professor in economics. And he was the former professor of finance at Yale University from 1999 to 2017. And last but not least, we have our old friend, Dr. Wang Huiyao. He is the founder and president of Center for China and Globalization. And Dr. Wang is an advisor to the Chinese government and has been appointed as counselor for China State Council in 2015. So welcome. And for the agenda today, we will have around 45 minutes panel discussion, and then we will open the floor to our audience for a Q&A. So if you have any question, please feel free to put your question into the chat box, and our colleagues will monitor them accordingly. So without further ado, let's get started. I want to start with trade. So since Trump administration started the trade war in 2018, the US trade deficit with China has dropped around 15% from 418 billion in 2018 to 355 billion in 2021. But the US trade deficit with the other parts of the world has actually rocketed 60% from 450 billion to 720 billion. So in terms of the trade deal, China has just purchased only 57% of the total amounts that it committed to buy under the agreement. So considering all these factors, a lot of economists have concluded that the trade war is a failure. So I want to start with Professor Jason Furman. So what's your view on that? And what's your overall evaluation of the trade war?
Great. So it's great to be doing this with you, William. I have the pleasure of advising you and a team of students on a really important research project, which has been one of the exciting things I've worked on here at the Harvard Kennedy School. And so I was very happy to do this as well. I think there are major issues in US-China economic relations that are genuine and fundamental and important. I think there are some big issues with Chinese economic policy and the way in which it treats foreign investment and foreign trade. I think, though, that by and large, President Trump's trade war was a distraction from the real and serious issues. I teach my students that when a country runs a trade deficit, it's almost always because of that country's domestic policies, not because of anything any foreign country is doing. In the United States, our trade deficit is a function of the fact that we have a low level of private saving, a high government budget deficit, and that is combined with a reasonably high level of private investment in the economy. And when you combine all of those, you have to run a trade deficit with someone. It's no surprise that the US trade deficit rose over the last year because our budget deficit rose much more than was the case almost anywhere else. And that will almost inevitably lead to a rising overall trade deficit. I also teach my students not to look at bilateral trade balances with any given country as a measure of anything meaningful about that country. It can be arbitrary based on labeling and the like. So, I think the fundamental mistake, and we can get into what would have been a better way to go about it, is to make public policy focus on the bilateral trade balance and to do that policy unilaterally. Instead, I think the American approach to economic relations to China should be done in a more rules-based manner, in a more multilateral manner, and should have goals other than just trying to get China to buy more from the United States.
That's great. So Professor Chen, what's your take on that?
Yeah, I agree with Professor Furman on the effectiveness of trade sanctions, or not trade sanctions, of tariffs and so on. But at a practical level, I would say the COVID pandemic has really saved China a lot, because otherwise, just by 2019, the Trump trade war was really starting to show a lot of effect with so much, shifting or moving out of China of certain manufacturing sectors to Vietnam, India, and other countries, or even Mexico. But then with COVID, it basically stopped whatever effect of the Trump trade war with China was having on the shifting of manufacturing out of China. So in that sense, I think without the COVID pandemic, the trade war's effects would have been very different. But in any case, I agree with Professor Furman that at the end of the day, domestic policies in China and domestic policies in the US have led to the still pretty big trade deficit the US has with China. Now with the geopolitical changes, this new trade that was started by the trade war will probably continue, especially after the pandemic is over.
Thank you, Professor Chen. Dr. Wang.
Yes, thank you, William. And I share many observations of Professor Furman and Professor Chen. But actually, I think that the China-US trade was really beneficial on both sides. For example, we see now US inflation is running at 7.5 now. It's that's very high, but for a long time, almost since the 80s. So that was basically 2 to 3%. I think there's a large number of quantities of Chinese good quality, cheap product actually kept that inflation low, has actually contributed to that. But also, I think that the trade that China now, as you mentioned, the number has maybe China has reduced a bit of a deficit for the U.S. But then all the rest of the world is really gone up. You can see that. I mean, ASEAN actually, since the trade war, ASEAN become the largest trading partner of China. So there's a lot of China actually many manufacturing has shifted to ASEAN countries like Vietnam or Indonesia or Malaysia. So that part of the region has actually gone up their export to the United States. But also I think that the reason we haven't completely fulfilled that phase one is because the pandemic also has a lot of impact on that. We had but I think on the agriculture side, China has largely, probably break the record. It still had a very good, for the U.S. To buy from U.S. It's break the historical probably record on that. And I was talking to former American ambassador Terry Brightstein. He was saying, basically the land in Ohio is, in his state actually has gone up agriculturally because there's more agricultural product to sell to China. So I think there's it's a complex situation, but also on the other hand, there's a lot of trade that US is in huge surplus that hasn't been calculated. For example, the service side. I mean, still we have a large chunk of a Chinese student going to the United States. They contribute a big amount of to the universities, and also before the pandemic, we have a 3 or 4 million Chinese tourists went to the United States. That is also a huge contributor. But of course, there's also service trade for the service companies. So many of that has not been calculated. The pure concept of President Trump as calculation, I think wasn't really a correct one, and that's why I agree with Jason that there's many ways to look at that.
Thank you, Dr. Wang. And I think all the three panelists have a basic consensus that the trade war or the tariff war is not the ultimate solution for the trade imbalance between the US and China. So Professor Furman, if you are in White House now, what's the suggestions that you will give to Biden administration about the trade relations with China? Do you think it's a good time to relieve some of the tariffs gradually? And what's the political possibility for that?
Yeah, I think now is a good time for the United States to reduce tariffs, if only for our own reasons, that we're combating inflation and a set of supply chain problems. I don't think that undoing the tariffs would make a huge difference in an inflation rate that is way, way above where we'd like it to be, but it would help. I do, though, want to make sure that the message gets across clearly that I think there are issues with not just the US-China economic relationship, but the economic relationship that many countries around the world have with China. Foreign companies are increasingly frustrated about the way they do business in China, some of the lack of transparency and disparate treatment around issues like regulation, antitrust, the protection of intellectual property, I think are all real and genuine issues. The question is, what's the best way to get at those issues? And I don't think it's, buying more soybeans and Boeing jets are the solution to those problems. I think the solution to those problems are sort of working together to better fulfill both the letter and the spirit of a set of international agreements, and of China, continuing to take the steps that it has been taking, but have been somewhat more halting in some respects lately, of reforming and ensuring that the market has a larger and larger role to play in the economy.
Great. And just following on this question, Dr. Wang, so what do you think? What's the perspective from the Chinese side on the fair trade, and how to address some of the concerns, just as Professor Furman just mentioned, like the intellectual property protection and the industrial subsidy in China?
Yes, I think that Professor Furman has raised a very interesting question. I think China has actually has gone a long way already, and to deal with those kind of challenges and complaints that we used to hear. For example, now China has set up a 21 free trade zone across the country. The negative list has been shortened again and again. And of course, also, I think China has passed a new foreign investment law, which I think have a very strict, penalties for violation of IPRs, and also that China actually now files more patents, and have more Chinese company actually concerned about IPR, and probably not even less than U.S. company now, because China is the largest applicants, patent applications in the world filing on that. So I think there's a huge interest for China to abide by that. But I think I understand there was a lot of complaint coming from this kind of a JV arrangement. Oh, there's a forced joint venture, but that was actually allowed by WTO, when China joined WTO. So I think when WTO gave assessment to the Chinese company, performance, it was always, more or less actually quite good, not really a really big problem there. So I think what actually can be done is that China will continue to do that to improve on its IPR protection. Actually, China has especially set up IPR core in Beijing, Shanghai, Guangzhou, and many other places. So that actually there is a statistic calculate that for all lawsuit actually on IPR violations, 80% has won by multinationals, foreign multinationals. So you see, China actually has done quite well on that. But I agree, it's always there's room to improve. There's always work to be done. But in terms of subsidy, that's also another thing. I think that I think China has really a great combination of a mix of its economy. They have about 60% private sectors, another 25% probably SOE. There's another 20% multinational. So it's really a combination that government actually rely on SOE to do many things. For example, leaving 800 million people out of poverty was really largely done a lot by SOE. Probably providing some subsidy and some help, even without profit. So many things has done like that. So there's a formula. I think China is probably developing a new model of new world that actually been doing well in China. But I think the matter is that if Chinese company going global, I agree that we need to really follow the international practice. But I think in China should be open to competition for all other, all type of company, including foreign companies. But right now, I think there's some subsidy for the Chinese company. Basically, is you need to, for the public sector, there's those unprofitable sector, the really livelihood of the important living standard in the country. So there's a pro and cons there. I think we need to make a more accurate assessment. I think one. As the KPI, really China is doing quite well. For example, if China SOE is not there, we could not have the 2/3 of the global speed railways. If SOE is not there, we could not have the 5 million 4G or 5G stations and all this great infrastructure. So there is a new trend, or there's new things that, for example, COVID-19 containment as well. State company played a lot of role. So I think. We have to, of course, the large chunk of that, provide employment, taxes, innovation, entrepreneurship, are largely done by private sectors. But I think China probably found the right formula. Multinational employs 20 million, 30 million people in China too, contribute 1/3 of the export. So it's great to how to work out the right formula. China is doing a lot of experiments.
Thank you, Dr. Wang. Very, very insightful. And Professor Chen, so what's your take on that?
Yeah, I would like to add that, of course, over the last 2 decades, or especially, since China joined the WTO, there has been a lot of progress in enforcing intellectual property rights and so on. But I have to say, in order to really address IPR and industrial subsidy issues, a lot of more fundamental reforms are needed in China. Well, the reason that at local government levels, there's just not much incentive to really enforce a lot of the intellectual property protection rules and laws, because the local governments, have to pay attention to the local companies' needs, business needs. If they really enforce, the various well-intentioned laws introduced by experts and officials in Beijing, then they would lose a lot of local fiscal income and lose employment. Over the last 2 decades, when I talk to mayors and party secretaries at local governments, they always point their fiscal income source and employment sources for the local communities as a reason for them to really look the other way when it comes to intellectual property protection. And this is also why local governments and central governments often get very much involved to intervene in various things through subsidies for certain industries and so on. So what I'm trying to say is that, for China to really solve this problem, the government really should do reforms to really implement the third millennia, well, the third plenum decisions. Now everybody forgot about made 9 years ago. Remember this phrase that came out of that third plenum that says, "Let the market play decisive roles," right? Of course, that session, which made 60 points of reforms, new agenda after the 18th Party Congress, but almost none of the 60 reform points has been really implemented. So if the government could actually really leave enforcement of rules and laws to an independent judiciary to really implement and enforce all those well-intentioned intellectual property laws and many other laws, then this forever ongoing complaint from the US, Europe, and other countries would actually stop. There would no longer be such a complaint if the judiciary in China could actually be left alone to do their work to enforce the laws. But we know that in China, nothing is independent, including the court system and so on. So when that's the case, we can complain and talk about how to change the intellectual property environment in China and so on. We can continue this kind of discussion forever without really seeing a real solution to this. Of course, industrial policies, subsidies can be addressed in a very similar way, because as long as the Constitution says, whether it's north, south, central, north, south, east, west, or central China, the party decides and leads everything, right? So whenever that's the underlying fundamental principle, all those other issues cannot disappear because the party has a say in everything, including intellectual property related cases. So instead of the law and the market playing decisive roles, right? So I think maybe Henry, maybe Dr. Wang can work harder to push for the implementation of those 60-point reform plans that now almost everyone has forgotten after they were passed, some 9 years ago. I think we just have to go back to address the real fundamental restructuring that's needed. Otherwise, all those other consequential effects will not disappear.
Thank you, Professor Chen. A very balanced view, and we can see there's still a long way to go. And now I want to shift a little bit to the financial market. So in the past 5 years, we can see a clear trend of US-China decoupling in political arena. But if we look at the US investment in China, it actually has increased gradually in the past few years. And for example, some US investment banks like Goldman Sachs and Morgan Stanley, they are even granted the full ownership of the joint venture securities firm in China. So what do you think about this divergence between politics and business? And to what extent the geopolitical uncertainties between the US and China will have impact to the investment environment in China in the long run? So I want to start with Professor Furman.
Yeah, I mean, you refer to geopolitical So we should talk about Russia's invasion of the Ukraine, which is just a flagrant violation of every international rule that has kept the world, a less dangerous place over the last 70 years. And the other thing is Russia's a very small part of the global economy. It's important for certain natural resources, some of which are very important for China, which is not rich in natural resources, but is very rich in the ability to and need to use them. But beyond that, Russia is very unimportant. And so I do think there is a risk to China if it decides that it's going to, align itself with Russia rather than aligning itself with the United States, Europe, Japan, Singapore, Australia, and the part of the world global economy that is much larger, much more innovative, much more important. I think that there have been pushes and ideas that there need to be more deglobalization, concerns about some of the resemblance between China's expansion militarily within its own neighborhood and what you've seen from Russia. I hope that's not true. I don't think that that's true, but confusion and misperception about the truth of it could lead to some acceleration of deglobalization. So I think that peace, that respecting borders, that not solving conflicts through taking sovereign and democratic countries and trying to solve them militarily in that context was the main way things were done for decades, served the global economy well. And I very much hope and expect that the United States and China can deepen their economic relations and that they're not threatened by trying to form an alternative bloc of countries or doing anything resembling the types of things that Russia is doing now. And again, I don't think that's going to happen, but just wanted to reinforce the importance of it not happening.
Yeah. So back to the question, like, what's your view on the divergence of the U.S. politics and the business world towards China, like the differential trajectory?
There's some divergence, but I talked to a lot of business leaders in the United States, and they were happier doing business in China 5 to 10 years ago than they are now. I don't think any business is ever going to want to delink from China, just like I don't think China's ever going to want to make its economy entirely move it entirely in the domestic direction that the direction that President Xi would like to move it in. But I think there's both a need to be in China. It's such a big, important economy. It's such a and increasingly innovative part of the global economy that we can learn from, and that our businesses learn from. The ideas don't just flow one way anymore, the way they did maybe a few decades ago. But that's combined with a set of discontent and a desire to reshore more and deglobalize. So you hear that from not just from governments, but from companies too.
Okay, great. So Dr. Wang, what's your take on that?
Yeah, I think that I think the world is getting really there's a huge deglobalization push on that. I mean the this crisis in Ukraine and Russian this operation in Ukraine is really caused great worldwide attention. I think China actually has taken a quite a very clear stand that they disagree with the sovereignty violation and disagree with this, conflict or war and things like that. And President Xi has said they like to work with international community to stop the crisis there and the war actually in Ukraine. I think that stand is very clear. I think there's a little difference is that in terms of the massive sanction there, because I think the Chinese felt the sanction in the past probably never worked well, but also you can bring down the war economy and recession into that. So that's something I think that's the problem I see as the only difference. But other than that, I think China has made it clear they are not supporting Russia. They are not providing any military or economic assistance like U.S. Some people, official U.S. may think. So I think that's already quite clear stand there already. And what I think actually this kind of a deglobalization and what has happened is really not just the Russian is pushing on now this time through the military front, but actually we see the war is getting a bit more secured alliance. Actually, U.S. is pushing. For example, U.S. has NATO. You have Five Eyes. You have now you have AUKUS, you have Quad, you have all those military alliances. I think the approach China is having is really a little different now. China is really pursuing, for example, Belt and Road is made an economic alliance, and then the China is joined the RCEP, trying to join CPTPP and trying to join DPA, and has built the AIIB, and also has now is signed an investment treaty with European countries. So Chinese approach is really trying to work on economically, also with African countries and many other countries too. So what I think, the problem we are now is that we should again, we did New Bretton Woods moment now. We didn't really Second World War finished. We had the World Bank, WTO, IMF, all those things coming up. We should probably strengthen the economic alliance, which China is doing now, rather than we are all forming the military, groups or alliance, and then that is really making danger. Finally, I would like to say, I think in order to solve this deglobalization issues, that we really have to, every country probably should concentrate on its own challenges. For example, what we're seeing in the US now is 1% of the Wall Street probably represent 40 or 50% of the massive wealth of the population. So the middle class in the last 30 years has seen their income, has gone up in zero, almost. So that is really the challenge that, and then if they are having this kind of situation, they'll vote the politician out of the Midwest or Rust Belt. Definitely, they're going to take a big chunk on China as a scapegoat. So there's a problem I think every domestic country has to solve, rather than put that into the other countries to blame. But I think what President Biden is doing now is great. Now he's actually proposing at the G7 now, G20 has adopted an global corporate flat tax, which is great. I think that is really important. So the multinational make money overseas no longer has to put it in a tax haven now. They can put the money back to the U.S., benefiting the Rust Belt, Midwest, so that they don't really take in China as a vent their angers and blame China for all the problem. Of course, China has a problem too, but I think we have to take some time, maybe 5, 10 years or 15 years, to get a new understanding of each other, and then maybe we can calm down some of those negative sentiment in those countries.
Thank you, Dr. Wang. And Professor Chen, what's your view on that?
Yeah, I think Henry had summarized China's official line pretty well, so I don't need to repeat any of that. But let me emphasize the challenge and the Russian war actions, implications, not just for the world economy, but in particular for the Chinese economy. I think after many years of seeing China practice politics first, rather than economy first in international affairs, whereas Americans and also Germans practice a totally different asymmetric strategy of profits or economy, business first, and politics last. So now two sides have more or less converged to the China model, that is putting politics above everything else. I've been, talking to different friends on both sides for so many years. I just thought, at least, especially for the last 10 years, politics is always the top priority for Chinese policy making. But many American friends don't see that. It's like, how can you not put profits and business first? But I think now the two sides have converged. But I think over the last 1 month, a lot of fundamental changes have been introduced with very, very long-term implications. Of course, there are many, many things we can talk about, but I can just give a couple of examples. For example, the very financial foundation of globalization has been totally shaken up this time of the last 1 month. Remember, as a finance professor, I would say we always say that foreign exchange reserves being held by other central banks should be taken as the most secure asset that every country and any country can rely on. But now with assets held in the Federal Reserve and the European Central Bank and so on being frozen as part of the sanctions, which I agree. I think regardless of how historically the sanctions have been proven to be in terms of their effectiveness, even as a gesture out of humanitarian considerations, there should be actions such as sanctions to be taken. But having said that, so this time with assets of one country's central bank being sort of parked with other central banks that can be used as tools for sanctions. So now, not just the People's Bank of China, but also the Royal Bank of India and all other central banks have to re-examine how they can actually manage their foreign exchange reserves and how they can, of course, some of them may buy more gold and so on. But no matter what they actually do, especially for countries like China with $3 trillion of foreign exchange reserves, where can China put that money, park that money? There's no way, to go back to just holding all physical metals as reserves, especially the physical metals don't really have that much liquidity. So that foundation is being totally, shaken up, to say the least. What will be the new financial foundation for globalization? I don't know. So every country, every player is trying to figure out the new normal. So maybe for most countries, one conclusion they should take from this is that you have to support and work constructively to establish and maintain a workable international order for globalization, rather than trying to play a very destructive role, because playing a destructive role is not good for any economy, especially for economies like China's, because China depends so much on international trade. So I think the lesson should be clear to all the countries that instead of trying to be destructive in the international order maintenance and reconstruction, rather they should take the opposite approach, that is play their roles more constructively. And then speaking, my second example is, as Professor Furman just mentioned, there are a lot of cross investments by American companies in China and then by Chinese companies in the US. Even putting aside the foreign exchange reserve management. So now this time, actually 2 weeks ago, we already saw those Chinese companies like Alibaba and many others that are listed in the US or even on the Hong Kong Stock Exchange. They were taken down in valuation by 50% or 80%, or in many cases 90%. So that just shows that the new sanctions of seizing Russian assets have sent very, very strong signals to American business executives and American investors, as well as Chinese business executives, that no big foreign trade dependent, foreign investment heavy country can really go in crazy ways on the international stage by invading peaceful societies and so on, because the consequences can be very, very big. So I think this challenge, of course, it's still too early because since the first day of invasion, it's barely over just 1 month. But I think the resetting of foreign investment in China and foreign investment in the US will take some time, but decoupling and deglobalization is a trend that no one can actually reverse, unfortunately. So given that, I think not only there will be a lot of challenges for the global economy, but also more particularly for the Chinese economy, these are the kind of challenge I don't know how the leaders in Beijing will be able to address. So maybe without getting into details, I mean, going back to the 60-point reforms, that's one of the steps the Chinese government can take to address this. And then secondly, and work very cooperatively with international leaders to try to make all those multinational organizations more effective and play a more constructive role rather than making them really as dysfunctional as possible. So I think China has a lot at stake, and it is in China's best interest to stay with Deng Xiaoping and especially my Hunanese countryman, fellow Zhu Rongji, when he was the premier, he was pushing for the WTOs and China getting into the WTO and many other things. I think if we go back to that kind of mindset, China can really, maintain the growth momentum that China has had for the last 40 years. Yeah, thank you.
Thank you, Professor Chen. Professor Furman, do you have any comments to add?
I mean, there's so much that's been brought up by everyone in this discussion, which has been terrific, I think, and I'm looking forward to the questions that we get to. I think fundamentally I agree with a lot of what's said, that I think AIIB, for example, is terrific. I'm not afraid of Belt Road at all. I think it can play a constructive role in some countries. I think in some cases, the terms of the loans and the like aren't as desirable to the countries, but those are all issues for China to work out with other countries. I think increased global economic engagement is really important. I think there's some issues that countries deal with on their own. US inequality was brought up. I think that's an issue in the United States. That's an issue that President Biden has taken some steps to address and will be taking more steps to address. And I think a lot of what, I heard in terms of, the way China is dealing with international economic engagement was very encouraging and positive, and I was glad to hear it.
Thank you. And I think it's time to open the floor for our audience for Q&A. And one of the questions we got is about the China concept stocks delisting risk in the US. So basically, I worked in the financial market before, and I'm always joking with my friend that the most dangerous job in the past year is maybe the fund manager, who managed the portfolio of China concept stocks listed in the US. So earlier this month, the SEC announced first 5 Chinese companies at risk of delisting if they don't comply with US auditing rules by 2024. So our question is like, what's the possible cooperation of the regulators between the two countries to solve this problem, and what's the real risk of that? So I want to start with Dr. Wang.
Yeah, thank you, William. Yeah, absolutely. I found this is really, that's something I think Chinese are getting a little bit more and more worried and also annoyed as well, because almost every week without goes by, there's the negative news from the US that how many company has been on the sanction list, how many has been on the watch list. There's totally almost 700 of them. It's incredible. I mean, 700 almost Chinese company on some kind of entity list or watchable list on the US. But just imagine, China actually passed the anti-foreign sanction law actually, and but then you don't see China actually imposed any sanctions on US companies. I mean, since China opened up, there's 70,000 all kinds of US company has been set up in China. They make a 700 billion revenue in China. China hasn't started anything sanction on them. No, not at all. I mean, there's only one or two probably close case is that there's 2 companies of US selling weapons to Taiwan, like Lockheed or Raytheon, but they're not doing much business in China anyway. China maybe expressed dissatisfaction on that. So I think it's not really a healthy sign, because we're in the 21st century. We really need really a more economic project. We need a new, post-pandemic and post-Iran war, Ukraine war. We need a new Marshall Plan or a Belt and Road Plan to really boost the global economy. And we need the China-US work together. And I think that is really important. One of the things I think does provide some good perspective, for example, is China has done this infrastructure, now the most advanced in the world now. And then US is also, thinking in a similar way. President Biden proposed 1.2 trillion, infrastructure plan and Build Back Better 3W, build these 3 Ws. And the European has proposed, a global gateway, 300 billion euros. So why not we actually, I was talking to Larry Summers, he's really also quite shared a similar view that we should boost the world infrastructure, like to really boost up World Bank, AIB, ADB, AFDB. Let's get all the development banks to work together, rather than we sanction each other, particularly sanction China, which has really caused a lot of geopolitical tension. And then eventually, we don't want to follow this, path of Russian, but if China push to Russian more closely, I mean, that's probably US has a lot to get credit for that. So I hope that, we should really have these 2 largest economies, as President Xi said. We have a responsibility to see the world in a better shape rather than we put it into recession. So that's my comment. Thank you.
Thank you, Dr. Wang. And Professor Chen, I know you are definitely an expert in the financial market. So what do you think about the risk of delisting of China stocks from the US exchange?
Yeah, I think the listing concerns based on accounting rules and access to the financial data and documents by US regulators. I think that issue is more or less resolved because just as I expected before, the CSRC and the Chinese government would have to make some concession in this area because there are too many leading Chinese companies that are listed in the U.S. that have benefited from the access, to the U.S. capital markets. So China just could not have afforded to see actual delisting to take place across the board. But on the other hand, I'm not as optimistic about the future state or status of those Chinese companies listed in the US, because as long as the geopolitical tensions keep rising between the two countries, it's just a matter of time and a matter of some creativity for some American politicians to find some other ways. For example, when I saw the news about 10 days ago, that the Chinese CSRC will cooperate with the American SEC to make the delisting, the accounting issue resolved. As soon as I read that news, I thought, well, Mark Rubio is not going to let China walk away with this. So he's going to find, he and others will find other areas to make continuing listing of Chinese companies in the US more difficult. So what I'm trying to say is that, if we go back to the previous Cold War, in between the two blocks, the Warsaw Pact bloc and then the NATO countries, there was no trade between them, and also there was not much investment between them. But now for China, the access to the US capital markets is so fundamentally important, actually for the last 10 years, as much as I would not want to see a real decoupling to take place between the two countries. And many people were thinking that there is actually a very serious tech war between China and the US. So to me, I always thought that if the US would want to win this war, it would be very easy just to totally cut access to American capital markets by the Chinese technology companies, which of course I don't want to see. But if the American politicians want to achieve a win in this technology war, then cutting off access would just take away a lot of the entrepreneurial and innovative energy in the Chinese tech industries. Because as a finance professor, I've spent a lot of years trying to examine sort of the important energizing roles by access to capital markets for technological innovations. We don't have a lot of time to go through this, but if we look at what industries are the most innovative and most energetic in China, it is those industries that have access to international capital markets that attract a lot of the venture capital investments. And then you wonder, why would the venture capital investments be mostly interested in those industries that have easy access to international capital markets? Well, because those venture capital managers know the exit option is there for those startups in industries that have easy access to international capital. So if you follow that logic, then you see that once the exit option is gone because of the lack of access to international capital markets, then venture capital will no longer be interested in funding startups in those technology industries. What I'm trying to say is that for China and the US, both countries rely on free flow of capital and goods across national borders. As protected by the trade and investment friendly international order. So if any country tries to do away with that international order, that's going to lead to a discontinuation of the kind of innovative energy and entrepreneurial energy that we have seen in China, just like what we have seen in Silicon Valley in the US. So that's really much more in China's interest by working together with other countries.
Thank you, Professor Chen. So Professor Furman, what's your view on that from the US perspective?
I confess I have actually followed this issue less closely than my friends on the Zoom call. So I don't have a lot to add to the discussion that we had, except share their enthusiasm for the importance of the internationalization of capital and investment.
Okay, no problem. So I think we are coming to the end of the panel. So I want to close with a question also from our audience. So what's your expectations, your hopes, and your concerns of the US-China economic cooperation going forward? So maybe every panelist will have 1 minute or several sentences to conclude your view. I want to start with Professor Furman.
So I'm hopeful about the US-China economic relationship. I know there are people on both sides that support delinkage and deglobalization, but the benefits of the relationship are so large to both countries that I think delinkage is basically impossible. And so the right attitude to take is how to make the best of the inevitable linkage. And I think there are a lot of good things that can be made from it, but they'll require, steps by China and steps by the United States, and hopefully no longer being distracted by the bilateral trade balance that we began this discussion with.
Thank you, Professor. And Dr. Wang.
Yes, I think that, as Zhiwu was mentioned, we are not living in a Cold War era that we don't have too much trade in between. Now we are, heavily intertwined, US and China, so China is also having created the largest middle class in the world, probably have 500 million in a few years' time. So I think there's a lot of things we can work together as, China has been opposing. What I think the biggest advantage now, we have to find the consensus to work. And right now, we are having this pandemic, which is plaguing the world economy for the last 2 years now. And then we have this, Ukraine crisis going on. So I think post pandemic and post-Ukraine crisis, there'll be a huge, infrastructure transformation for the world. And China is already on this leading position in terms of infrastructure. So, but the US has realized that, European has realized that, the developing countries are badly in need of that. So why can't we really, stir up this global infrastructure revolution that let's have a new global plan for the post those terrible crises we're having now, so that at least we have a big pie to work with each other, interest to work with each other, so that we concentrate a bit more of the benefit rather than we're getting into the negative of the geopolitical downward spiral. So I'm really thinking of we need to have some urgent work to do that to revive the global economy and prosperity. That's the best way to avoid war, the Third World War, which I think we so successfully avoiding so far, but is actually breaking down. So we need to really boost our global alliance on the development and the cooperation.
Thank you, Dr. Wang. And Professor Chen.
Yeah, I think both Jason and Henry have done a good job playing a diplomatic role, trying to be optimistic. So that's good. Since both of them have expressed their optimism, so let me be a practical person. As much as I would not want to see the world as it is, rather, I would like to see a much more cooperative, trade-friendly, and with every player, every business focusing on just working together to make more money. Because of the last 40 years, as I have been traveling between China and the US before the pandemic, at least 4 or 5 times each year, for many years, I just could not believe that everybody was able to ignore politics and values, just try to cooperate to make more money together. So money was the main or the only objective. But unfortunately, now that's no longer the case, not only with the pandemic, but also the Russian war in Ukraine. The world is very different. So no businessman can really ignore politics, or especially geopolitics anymore. So that's why, with the impact from the pandemic, forcing every country to look for more self-dependence, for more independence economically and trade-wise, but also with the geopolitics, so whether we like it or not, every country will try to decouple to some extent, or as much as they can, from their dependence on imports from China and their dependence on capital from the US and so on. So this is why we are really we're no longer just entering a challenging phase in world history. We are in the middle of it already. So every country has to work hard, try to protect its own interests and, to the extent they can. But at the same time, every country has a responsibility to really work constructively with other countries, rather than counterproductively to maintain as much as we can, the trade-friendly international order. So that's the only way to go. Otherwise, we would go back to the old bad days. Yeah. Thank you.
Thank you, Professor Chen, and thank you for all our 3 panelists. And it's such a fascinating and balanced discussion today. And I really wish we have another hour to get deeper into all these topics. So we have a very fruitful discussion today, from the new ways to deal with US-China trade, the impact of geopolitical risks to the financial market, and the challenge of globalization. And I wish our audience have enjoyed this discussion. So thank you again, and take care and goodbye.
Bye.